So I think one of the challenges in preparing for this session is probably just the sheer number of policies, of announcements, of general noise from the government ever since the election on this whole question of employment rights, employment costs. So most of what we'll be talking about is on the left-hand side there, what's been called a whole number of policies under this agenda of make work pay. But actually, as we all know in this room, we had big announcements in the budget on national insurance, we had announcements the day before the budget on minimum wage, and we've had big announcements on pensions as well in the last couple of weeks. So we will just very briefly touch on some of those other areas. But our make work pay bingo card. So make work pay is really a whole collection of different policies. First announced before the election, Labour's plan to make work pay. And now most of these are encapsulated in the Employment Rights Bill, which went before Parliament last month. And I think we've got 4 consultations on the go at the moment. I know we'll have many, many more over the course of next year before probably 2026 is when a number of these will become law. Just in terms of the respective areas of expertise of Sarah and myself, I primarily focus on helping employers understand the financial implications of changes to payroll or changes to employment law. So I do lots of numbers. I don't do legals, but Sarah will pick that up. So given that, I will focus just to start with on one of the particular more calculation-heavy areas around pay gap reporting, and then Sarah will pick up on a number of these other areas from the bingo card. So, pay gap reporting. This applies to employers with over 250 employees, and the current regime around gender pay gap reporting came in 2017. And the current requirement essentially is to calculate and publish your gender pay gap each year. So you have to publish it in 2 places, on the government reporting portal and also on your company website. That second one is something a lot of employers forget actually, but needs to be published in 2 places. So the government have said this will go further. You will have to have an action plan in place to address the gender pay gap. Menopause support in particular has been pulled out as an example of something that should be in that action plan. And if we think about the current regime, which came in 2017, there has been progress in closing the gender pay gap. But if you dig into the data, about 1/3 of employers have made no progress at all since 2017 in closing the gap. And so this proposal to require an action plan is really about trying to accelerate that progress and probably focus on that 1/3 of employers who aren't currently making progress. The current requirements are all about gender. The only mandatory disclosures around the gender pay gap. There are a number of employers who look at other diversity characteristics, but it's only gender which is required. So that will be another important change. Ethnicity and disability pay gap reporting will be required. And in terms of the enforcement regime, it's basically a pretty light touch enforcement regime at the moment. It's overseen by the Equalities and Human Rights Commission, and the key penalty is if you're very tardy in missing the deadline, you will get named and shamed by the EHRC. There's no audit of calculations currently, but we know that enforcement regime is going to change, so the government has said there will be a new enforcement body. We still don't know the detail of what powers will they have, what penalties will there be, what will the approach to enforcement be. But I think it's pretty clear that the light touch enforcement regime we've had on pay gap reporting so far will change, and we will have a far more beefed up approach to enforcement. So this will create a lot of challenges. You know, the industry, the UK, I would say, responded pretty well to the gender pay gap requirements in 2017. There are 15,000 employers who are in scope for gender pay gap reporting, and I think I said before, only 8 were named and shamed last year. So actually, you know, that is really a pretty good level of compliance at one level. But you sort of dig into the data a bit, and you do find some challenges. So on the right-hand side, and I'm very conscious you won't be able to read what's on the right-hand side, but don't worry, you'll see it later when you get the slides. It's an extract of a flyer we published, which were top 10 errors in gender pay gap calculations. So although we've got generally a good level of compliance, actually you don't have to dig too hard into the numbers to start finding issues coming up with the current reporting regime. And those issues are going to get a lot harder. So first challenge with the new regime, getting the data. So most HR systems obviously already record gender, but don't record ethnicity or disability status. So how do you, as an employer, how do you persuade your employees to voluntarily disclose that information? And in particular, you know, if we think about disability, there's some really sensitive information there. Dealing with sample sizes, if you want meaningful results, ideally you need a certain sample size. And we already see cases on gender where some organisations will report a 0 or even negative gender pay gap, but you dig into it and the reality is there are very few females in the organisation and they happen to work in head office or in senior roles, and that is basically skewing the numbers. Determining the categories, so especially think about disability, we've got physical health, we've got mental health, we've got long-term health issues versus what might be transient health issues. How do you put all of that together? And I think what all of that will lead to is some pretty high-level questions on a sort of self-certification basis. So do you consider yourself to have a disability, yes or no? And that's what would feed into your disability pay gap. And just the final challenge is really about resourcing and bandwidth of HR teams. We already hear this a lot around gender pay gap. If we think about extending this to ethnicity and disability, not to mention everything Sarah will talk about, this is going to be a huge challenge for HR teams. So as an employer, what can you do? I'd say it's about preparing early. It will take time to collect the data, to understand what your results look like, to develop an action plan, so prepare early. So just quickly on some of these other areas, obviously big rise in employer national insurance, significant increase in minimum wage, so huge cost pressures that employers are going to face. What can you do to mitigate it? I mean, I think it's about maximising the use of salary sacrifice, and I'm sure there's one or two exhibitors in the hall outside who'll be happy to speak to you about that. So maximise salary sacrifice, think about reward holistically, and if it's feasible to rebalance over time some of your reward away from simply cash and salary into employee benefits, especially things like pension where you don't get employer national insurance levied. In terms of pensions, the big mantra in pensions from government for the next couple of years will be consolidation. So there are thousands of pension schemes in the UK, whether defined benefit or defined contribution. The government's very clear, they don't want thousands, they don't even want hundreds, they want a few tens of mega pension funds. They see that as the best way to encourage investment in the UK and to get better outcomes for members. So consolidation of pension schemes will be the sort of driving mantra in pensions. One thing I don't think we will see in pensions is any change to auto enrolment minimum levels for the foreseeable future. So I think that's been a huge area of debate, whether to increase the percentage level from 3% or to actually bring down the starting thresholds so you pay pension contributions on all earnings. But actually, given the announcements we've had on NI and minimum wage, I think that's where the government's focus is, and I don't think there's appetite for the foreseeable future at least to put any additional cost burden on employers. So there's potentially maybe a very small sigh of relief from some employers. So is that a good point, Sarah, to hand over?
Amazing. Very impressive. Thank you very much, Mark. Very good on timing. Thank you. As Mark said, my name's Sarah. I'm a lawyer. Apologies. Get that out there now. This is very timely, though, for me to come and talk to you about the new government's reforms. I was going to say, because I spent the night last night with Alistair Campbell, but I realised that sounded very dodgy. Alistair Campbell came and spoke at an event we hosted last night, is a better way of putting it. I had hoped he was going to spill the beans a little bit more on what to expect from the bill as it passes through government, but instead he just told us lots of salacious things, which I won't repeat here, but if you want to catch me afterwards, I'm happy to. So anyway, the Employment Rights Bill, as I'm sure you've all seen in the press, this is coming out, or at least the earliest that the laws will come into force will be the autumn of 2026. So I think everyone sort of breathes a huge sigh of relief, but of course, as Mark mentioned, there's going to be a lot of work to do to get ready for this. There's little doubt that this package of reforms will really change workplaces, and of course that was very much the government's intention. On the bingo card, we should have added the phrase there'll be further detail on this because I feel like I'm going to repeat that over and over in the next 10 minutes. But the bill's given us the bones of the new regime, and as it passes through the government process and through consultation with stakeholders, we'll start to get the flesh on those bones. So it will be a case of kind of watching to see how things progress over the next 12 to 18 months before we really understand exactly what these impacts will be. But I think it's fair to say that, everyone was kind of waiting, anticipating quite significant changes, and there are going to be significant changes in a number of respects. So, firstly, looking at unfair dismissal, this one got a huge amount of coverage before we actually got the detail. Sort of lauded as a day one right. As I'm sure most people in the room know, currently you have to be working for 2 years before you get unfair dismissal protection, except in very limited circumstances. As I say, the government lauded this as unfair dismissal being a right from day one. That's not actually what the bill has said. So whilst the bill has removed the 2-year qualifying period, employers will now have, we think, 9 months to be able to assess people and to then dismiss in a lighter touch process. We don't know what that lighter touch process is going to be. That's my first mention of it. But we've got a bit of an idea as to the fact that it's going to not have to involve paying the same sort of compensation that you would pay for a standard unfair dismissal situation. And I say we're anticipating 9 months. That's what's been said at the moment, but that may change as well. It won't apply to redundancy dismissals. So we don't know exactly whether the current process for dismissing people for redundancy, the current consultation that you have to go through will be the same, or whether there will be some variation to that as well. So we'll wait to find out what that one has to say. But I think for anyone thinking about getting ready for this, obviously if you've got people with you at the moment who have not yet got 2 years service, you may want to be making decisions about their suitability for future employment. But you also need to think about your employment contracts and your policies to make sure that you're tying in this new probation period and new light touch dismissal process once we've got that level of detail. Family-friendly rights has also had a lot of coverage, and anyone who has ever had the pleasure of trying to work out all the different family-friendly rights that exist and pair them together will know that it's not an easy task at the best of times. This does simplify things a little bit. So parental leave will become a day one right, and you won't have to have had a year's service to be able to qualify it. It will remain unpaid, however. Then separate to parental leave, we have paternity leave, which again will be a day one right, and that can be taken following a period of shared parental leave. So we've still got parental, shared parental and paternity, obviously in addition to maternity and adoption. Bereavement leave will be coming in, day one right again. It's going to be at least 1 week's leave, so we don't know whether that might increase. And currently it's billed as being leave you can take for the death of a family member. But again, we don't yet know how family member is going to be defined. And of course, a lot of employers already have bereavement leave built into their existing policies, but you may want to just think about how you might want to amend your family rights policies to be able to accommodate all the new rights and simplify, I think, for people, because I see a lot of employees kind of trying to work through what their rights are, and it isn't straightforward, as I say. Parental bereavement leave won't change, so that's going to just be a carryover from the old government. But there will be enhanced protection for those who are dismissed or potentially going to be dismissed following a period of family leave. And that's going to be for 6 months upon your return from leave. Any dismissal will be unlawful, except in very limited circumstances. We don't yet know what those circumstances are going to be. So, a bit of a watch this space again. But I think essentially, as we currently see at the moment, there's enhanced protection for women returning from maternity leave in a redundancy situation. I suspect it's going to be expanded beyond that. So we'll wait to see how that comes about. Flexible working, again, has had quite a lot of attention to it. Although there was sort of a lot of noise about the flexible working regime being changed quite significantly, when you drill down to what the bill has, the changes aren't actually that significant. If an employer receives a request from an employee to work flexibly, they'll need to explain any refusal of that request and also why that refusal is reasonable. But it will still be linked to the same statutory tests as we have at the moment. So, as I say, not a significant change. There's always going to be a requirement to consult with the employee before you make your decision. But again, that's not very different to what we have now. So dust off your policies once we know the detail, but I don't think you'll need to make a huge amount of change to those. Looking at a few of the other highlights, I would say, and I appreciate I'm having to canter through these at a huge speed. Collective redundancy process. At the moment, if you're dismissing more than 20 people at one establishment, you have to consult collectively. That's changing so that rather than being at one establishment, it'll be 20 people across an entire business. I actually think that's a really welcome change. The one establishment rule is confusing in terms of what do you actually mean by that. And of course, with so many people now working remotely, is their home a single establishment, or should you be bringing all of those home workers together and classifying them under one? This will make it much clearer. They will all be one business, and therefore you're going to hit your 20 a lot earlier, but as I say, I think it brings with it a level of helpful clarity. As you probably know, employees have a right to a statement of written terms of employment upon commencing employment. This is going to need to have an additional point now advising employees of their right to join a trade union. It's also been billed as something that needs to be sent to employees at prescribed periods during their employment. We don't know what those prescribed periods will be, but it's a reminder of employees essentially of their right to engage in collective representation through a trade union. Staying on the subject of trade unions are going to have greater access ability to your workforce. They'll be able to request access agreements to allow them to come in, to meet, represent, recruit and organise members, and to facilitate collective bargaining. And you can imagine that's something that a lot of employers are feeling a little bit nervous about, and what those access agreements are actually going to require, how much they can resist them, how much they can negotiate them, what happens if you can't reach agreement. At the moment, complaints would go to the CAC. If anyone's ever had the pleasure of going to the CAC before, you'll know that it is a rather unpredictable beast. So it'll be interesting again to see how that plays out. And also the resources. I mean, the CAC and the employment tribunals are so under-resourced at the moment. So trying to get this additional rights being heard through these institutions will be very difficult. Industrial action, there'll only need to be a simple majority of those voting in the ballot will replace the current requirement for 50% of the turnout. So, again, a relaxation of the ability to be able to engage in industrial action. Hopefully that won't see a huge increase in industrial action, but it might at least give trade unions the power to negotiate a bit more by saying to employers, well, look, we think we can get this simple majority. It's going to be a much easier process for us, so let's negotiate rather than you face industrial action. And just generally on recognition for trade unions as well, the threshold is going to be lowered for them to get recognition. They'll only need either between 2 and 10%. Again, we don't know where we're going to land on that. 2 to 10% of the workforce will be needed to get recognition. So there'll no longer be a requirement to show that at least 50% of the workforce supports the recognition process. So that's a significant change, as you can imagine. So I think one of the questions I asked Alistair last night was, there's a lot of reform coming here, a lot of changes. Do you think this is going to stop employers from wanting to do business in the UK, particularly overseas investors, if we're moving to a platform that's more akin to continental Europe and the more heavily regulated worker rights in continental Europe? He replied, I won't say his exact words, but he didn't think that that would be the case, or certainly he hoped that wouldn't be the case. Other people in the room had a bit of a different idea of that. We had quite a global audience, so you can imagine that some people are watching this with interest about, UK is quite an attractive place to be an employer because it's not that employee friendly, particularly in comparison to the likes of Germany, the Netherlands, France, of course. So we'll have to see whether this sort of extra regulation that's going to be coming in is going to achieve what the government want in terms of giving workers enhanced rights, but not alienating this as a place for business for employers. So, wrap up.